What's going on, everybody? Welcome back to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. Any market, really. So, in this video, we're going to go over volume. We've already gone over structure, supply and demand, how price reacts at key locations, and, reversals versus continuation, all that good stuff. So, in this video, we're going to go over volume and what it means. What does it mean? So what it doesn't tell you is where price is going. It tells you who is participating in the market, and that's what matters. So what volume is actually measuring is how much trading activity is happening during a candle. Okay, and that's it. High volume equals high participation in that move. Low volume means low participation in that move. So it doesn't mean bullish. It doesn't mean bearish. It doesn't mean you should buy. It doesn't mean you should sell. It just means effort within a move. So high effort with little result is where you get absorption. So we have high effort here in this candle right here. Yes, it is a nice strong push to the downside, but what do we not do? We do not take the structural low, the swing low. We do not take that, and ultimately price stabilizes and then starts to climb higher. So because of this, and because we have high volume just in this general zone, and then we get a continuation after a break of this high, this tells me that we have high participation in area, meaning we can use that to refine our supply and demand zones. In this instance, it would be a demand zone. And you can see when we get back, before we even get back to that zone, we see high participation again as we are approaching that level, and we get a nice little bounce. Now, for our scalpers out there, this is what we like to see. We like to see a nice bounce. But it's important to note what volume does after that bounce. I mean, it just kind of falls off a cliff. So we're not seeing a whole lot of follow through on the move itself. Now, for low effort, big result, we don't really see that all too often. Usually you're going to get, if you see a big result, you have high participation. That's just how it is. So when you are in a trend, typically you're going to see high participation. But if you don't, low effort, big result means that you have an imbalance somewhere. Now notice when price returns to this zone, you get a nice spike in volume. But what does price do after that? Context matters. Price is just chopping around at this level. Granted, we're going into a weekend. So if you know anything about weekends and trading, it's basically just go outside and touch grass. Don't do it. Because you have low volume, low participation. It's not the greatest time to trade. In my opinion, a lot of other traders will tell you the same thing. Trade Monday through Friday if you can, without distractions during New York session. Asia is typically low volume, so you don't tend to get a lot of big moves, but you can get big moves there in Asia. But besides the point, we can see every time we come into this zone, we get spikes in volume. Okay, and we're sloppy and we're choppy. So what we're seeing here is absorption, because since we are touching that zone, but price isn't swiftly moving away from it, we are seeing absorption of buy orders, sell orders, orders in general is what we are seeing absorption of. So the key locations to see volume is at key levels. The key locations to see high volume is at your key levels. I said that all messed up. Doesn't matter. Volume by itself is meaningless, and volume matters when it appears at supply-demand zones, such as this, at structural levels, highs and lows, and during potential reversals or continuations. So break of structure with some follow through and volume that closes above the previous high. So if we're coming up here and we get a break of structure with volume that is not a sweep, meaning we don't just wick above the high and then close back below, but we actually break, close at the high of the candle with high volume on this move, typically that is going to lead to continuation. Now, if you have high volume on just a wick on a spike above a key level, that is most of the time going to signal a reversal. So we mark off a key level. We'll just say it's a swing high. We're moving to the upside. Come back down. We come up. We sweep. And we reject. We don't see any follow through, no continuation. Now, my personal next step is, if it is a true reversal, I expect to come down and take that swing low, get a close below it, and then I'll look for a pullback and then a continuation lower. Now, if we are bullish, if we want to continue to be bullish, we want to see us create that swing level and break above it with high volume, with conviction, pull back and get continuation. So our biggest spikes in volume come, here's one right here. This one candle right here has a nice spike in volume. Now, why do I have this whole level marked off? Well, if you go back to my previous video on supply and demand, I like to take the last low and last high before the plunge, before the move down, especially if there's volume at that level as well, which we get volume really on this big candle right here, which means we have high participation in sells. That's what that means. We have high participation in sells at this level. Now, what happens if I just mark off that one candle? Mind you, we are on the 15-minute. But if I just mark off that one candle, let's see, what do we do down here? You can see we get a rejection. Okay. We have a low down here that has a nice spike in volume. So we're just going to mark off that one candle. Let's make sure we've got it down. Okay, so I want to take the low, the candle that put in a low, because both of these candles here and here, right next to each other, have high volume. And look, we push away, we come back, tap it. Nice rejection wick. We're rejecting that level, not getting accepted. push back to the upside. Now that high volume candle, you can see we got real choppy and sloppy within it, because we had a lot of participation in that candle, so there's a lot of orders there. Now, notice big move. So this is where there's going to be a lot of orders. It's a nice big candle here. So now we look for sweep of the level to get taken out, which we do take it out. We reject. This is right back to the example I was showing you guys just a couple minutes ago. You get the push to the upside. And the important thing is these lows in here. So these are your internal lows. And what do? We come down, we take all those lows, we get a nice push up, and then we get a continuation down, back down to this demand zone. And then right back up to that same level, and then right back down. Now, we are also getting absorption at these levels, indicating what? That buyers, sellers, orders are being absorbed, and the price in this general range is being worked out, and then eventually all the orders get filled. You have more sellers than buyers, so all the buy orders get filled, and then you move lower. And that's what's going on within that. So volume, you can also see that big spike in volume here at this low. But as we push higher, we actually get a slowdown in participation between, well, this one and this one. Pretty dramatic shift in our volume from this low to this high. Context. What is that telling us? That tells us buyer step here, but they failed to continue here. So we're not seeing as much participation at this level outside of sells, and we know that because we get the big drop after the sweep of this high with high volume. Just decent volume. So take out the lows, retrace, continuation. Volume, again, it's all about context. We'll go over how to do more intraday trades on volume, but you can use volume on any time frame for any kind of trading. It's just another layer of context, of confluence, and hopefully this video was able to, hopefully I was able to kind of at least help you understand what is happening with volume at these different levels and what it is signaling to us. Is it signaling rejection or is it signaling absorption? Are we seeing rejection at highs or are we seeing absorption at highs? If we're seeing rejection, that level's pretty strong. It's being defended. So when we return to it, if we return to it, we can expect further rejection. If it is getting absorbed, if you're seeing price getting absorbed there, then that level, once you come back to it, you're more likely to go through that level because you don't have the outstanding orders that need to get filled. So you go through that level, price is fair, we're at a fair price for the market. So you're going to go through that level to try and find where there is disagreement on price. So hope that helps. A little bit longer of a video for this series, but that's okay. I feel like the more I explain, the better. But still keeping it at 15 minutes, just a little bit over now. So yeah, thank you guys for watching. If you like this video, give it a like and a thumbs, or give it a like and subscribe to the channel. All that good stuff. It's whatever. You know what to do by now. Anyways, mad love. God bless. See you guys in the next video where we go over VWAP. Awesome. Have an amazing day. Bye. Ride the waves.